Good Monday evening, everyone, and thanks for joining us for a Market Chameleon webinar with special guest Felix Frey. Before we get started, let's go through the disclaimer. Neither Market Chameleon or Options Geek, Felix, myself are not registered investment advisors. Please take your time to read the disclaimer. This is for informational purposes only. Take a second, read it, and as people come in, let me know where you're from. My name is Will McBride. I'm one of the co-founders with Dimitri of MarketChameleon.com. Felix is a man with an impressive resume, but right now he's working with a company he created, Options Geek, and he's a big, we're a big fan of his, and he's a fan of ours, and we do these webinars together. We try every couple of earnings season, and tonight's webinar is going to, what's the title? Excellent trade ideas or searching for a great trade idea. I forget, Felix. What is it?
A great options trade idea.
A great options trade idea. We're all searching for those. Let me remove Dimitri. He's not in. All right. You want to tell us a little bit about yourself before we get going, Felix?
Yeah, sure. So I started Options Geek. Now it's a few years. Time flies. But I graduated from Wharton, worked 25 years on Wall Street. I was working unique experience because I worked on the investment banking side, and then I jumped onto the hedge fund side, the buy side. Very unique experience, not just because I did that, but also because I was a volatility trader at the investment banking side at Bank of America. I was making markets for the biggest guys in the world. And then I switched over to the hedge fund side where I was trading a different game. I was trading options for direction. So that unique experience sort of I put that together and translated all those years into Options Geek, and part of the idea today, or the great options trade idea presentation today, is to really help people understand. Over the years, I've added many pieces to Options Geek to understand how they all fit together, and the purpose of the whole everything I've built. So that's the lead in.
Perfect. So how we do have almost 30 people right now coming into the Zoom. We have about 25, 30 on YouTube Live as well. So the questions, how do you want them to come in? On YouTube, people, believe it or not, can ask the questions live with their voice if they want.
Yeah, they can come in. They could stop me. They could stop me along the way if if it's something that that I'm talking about and they have a question, it would help. Yeah, that's fine.
All right, perfect.
I always feel if somebody has a question, 100 people have a question.
Awesome. So if you're on the Zoom, raise your hand, ask a question. You can come on live if you want, or just type it into the chat. If you're on YouTube, just put it in the chat and I will get the questions over to Felix. And with that, let's go, Felix.
Sure. Let me just share my screen here. All right. You see the screen?
Yeah, perfect.
Perfect. All right. So great options trade idea. Again, this is my background. I worked at a couple of years at Swiss Bank O'Connor. O'Connor was a very good place to start, great education. I then was recruited by Bank of America in New York, moved back to New York, and then after 10 years went to work at Scoggin Capital Management. So I'm on LinkedIn. If you wanted to connect, that'd be great. I'm happy to do that. When you think about an options idea, I think it's important, the ideas make all the money, but how you get the idea is really a process. And I don't think there's a great appreciation for how ideas are formed. Where do they come from? How do you think about them? The questions that people will have, the trouble that you get when you get to a certain spot and it's not connecting with what you're seeing in another area. There's a lot going on behind an idea. And so I wanted to peel the onion, if you will, and take a look at how I do it. It's not the only way to do it, but it's a good process and it's additive to other people's processes. I use certain mechanisms that everyone could use and I think should use, frankly, but we'll get into that in a moment. When you talk about an idea, I'm always thinking about how the top guys do it, how the biggest guys in the world, where do they find their edge? How are they thinking about an idea? Especially how are they thinking about an options idea? Okay, because that's what we're looking for. And, I've shown this slide before, but this is an important slide because this is where the top guys in the world are finding their edge. They're finding it in the idea and in the options and in their overall strategy. If we looked at sort of, the idea, within the idea, okay, just within, that's a high level, 1, 2, 3, 4. But within the idea, there's a number of processes. right? Not every hedge fund or every big money manager is looking for ideas the exact same way. Okay, some are using fundamental analysis, technical analysis, and others using just quantitative analysis. Then there's data analysis, but they're all doing different things. Okay, and they have access to different resources. Many of them have as much money as they want to develop the idea. So that's something that is their edge as well. They have experience. Some of these guys have been doing this specifically, whether it's bonds, equities, currencies. They might have been doing it for 30, 40 years. So there's a lot in that experience that gives them some edge, the know-how. Okay, so that is a clear one where everyone understands that they have edge. They're getting informational edge. They're doing something to analyze that's better than other people in general. Okay, then you look at how much are they spending, because you want to. I always like to give context to what I'm saying. So when Bill Ackman, Bill Ackman has this Herbalife trade idea, which was dead wrong, which is besides the point. It was $1 billion short position. And he was on record spending $50 million just in cost, just in getting the idea out there, in time, resources, manpower. He was on every talk show, just trying to be out there talking about this idea. He spent $50 million. $50 million in the grand scheme of $1 billion idea is not, $50 million is a lot. When it's a $1 billion idea, it's 5%. Okay, he was looking to make 50 to 100% on the trade idea. So you got to put things in perspective, but they're spending a ton of money, which gives them that edge, right? To get the information that they're going to need here. Let me just press the button here. Once they get the idea, they have to make a decision on how to invest in the idea. So it's usually, we're just going to go here, stock or options, right? Do they want to do stock, options? Do they want to do both? Usually they're invested in stock and they're making the decision whether or not they want to add options to it. Okay, usually. And that's know-how, that knowing how to choose when you're going to use options is know-how. Okay, and the example I always give is, here's Steve Cohen's portfolio. On the right side, it's going down by notional values and size. And you see, out of his top 10 positions, 8 of them have options in them. 8 out of the top 10. You go down to the next 20 or so, and there's only 2. And then there's next 15 to 20, there's just 1, Qualcomm. So what the point I'm trying to show here is that there's got to be some reasoning why he's choosing Qualcomm to use options and not all these other stocks. There's got to be some reason. Okay, it's not just he's just guessing and saying, Qualcomm, I'm just going to buy 5,000 options and that's it. There's a lot of thought, there's analysis to understand this is a trade, this is an idea that warrants the use of options, and this one is not. It's not giving me the opportunity. Okay, so I'm trying to help people understand there's know-how, there's knowledge there's experience in number 2. And then once you say, this is an options idea, right? I showed you they're playing options in certain names. Okay. Then you got to actually pick the right option to buy. And I'm telling you, and at Options Geek, I lead with this. There's no explanation out there. There is no explanation to choose the option that's right for you. Okay. No one teaches that. What they do say is, add this here because I say that the industry never taught anyone how to do it. So most investors don't understand, they're guessing, and it's not because they're not smart enough to understand it. It's just nobody's ever taught it. Okay. And the trick that everyone does, and you can go see this because I've done this a million times, but feel free to do it yourself. You can go online and just type in, how do you choose the right option? The first one is always Investopedia, and it has a decent article, but the trick is, here's the trick. They always say, if you bought this option, then all of this happened. Okay. If the stock goes here, this happens. My question doesn't start with what happens after you choose an option. My question is, how did you choose that option? Okay. And you won't find an answer. And it's pretty important, I think, to understand that there is once you accept that, I think you should be curious enough, if you're using option, saying, well, what is the answer? How actually do you do it? Because people get stuck for hundreds of hours on YouTube looking for the answer, looking for answers in general, and they have a tough time. They have a tough time because the industry is focusing a lot on implied volatility and a lot on a lot on the Greeks. And I can tell you from sitting next to the top guys in the world, talking to them each day, they're not focused on that. They might use it a little bit. They might, gauge implied volatilities to figure out whether or not it's the right time, but it's not their focus at all. Okay. So it's important to understand that choosing the right option is also edge. Understanding how to do that is edge, because if you don't understand how to do that, then the reality is that you're guessing. It's cut and dry. Either you know the answer or you don't know the answer. And I'm telling you that you probably shouldn't know the answer because it hasn't been given to you. Okay. And that goes across OIC education, Investopedia, the millions of articles that are out there, any online option guru explaining it. Just ask the question. If you don't believe me, just ask. I'm very honest with all this stuff. I'm telling you, I spent 20 years as a top options expert in the world. I had the same question. And the bottom line is, when you work on Wall Street, you can't really ask the silly questions because you don't want to look silly. Because if there is an answer and you don't know it, how are you even rising the ranks within a Goldman Sachs, a Bank of America, a Deutsche Bank, a Credit Suisse? You should know this answer. But if you ask the top guys, you could see, and if you play poker, you could see how they react, that you'll put anybody on the spot, they get a little bit nervous because it's a tough question. Okay, so the point is that where do the top 1% find edge? The idea, and then in this realm of options, when to use options and then which one to choose. Lastly, there's this strategy, the plan, how they do it, how they get in, how they get out, when they decide to get in, when they decide to get out. That's part of playing the game. We won't even talk about that here, but that's also an edge. That's through experience of how they're actually allocating capital. Everything that we talked about, the stock versus the options, when to get out of the options, when to get into stock, how to get out of stock into options. All of these things part of understanding strategy in the plan. Now, to simplify it, the top guys in the world buy options, but they buy options in a very specific way and at a high level. Okay, they are looking for the big and unexpected move, That's why they go in. That's why Steve Cohen or Bill Ackman will use options, because he's found a situation that they believe that the market is not focused on that situation. It's not focused. Either they don't know it or they don't understand it. So that's why they're playing options for the unexpected move. Okay, we're gonna have questions on that, because the unexpected, what exactly does that mean? Okay, when you say the big unexpected move, if you're them and you say, oh, this is a great idea and a great stock idea, it's something that can move a lot and it's big and it's unexpected. The question is, what exactly does that mean? Whenever you're listening to someone teach options, I'm always the one in the front row, especially, what exactly do you mean by that? And I think people are afraid to ask. So I ask, what do you mean? What do people mean they're expecting a big move? When we're looking at these top four places for edge, what I'm trying to do at Options Geek is help investors create their own 1, 2, 3, 4, to help them, show them you need to have an idea. You need to have know-how on using options, and then you need to understand a plan and strategy. Mainly, the questions comes, I can teach you the options, and that's why I started Options Geek. But what I realized was, I need to help people with the idea, because within the idea, there's millions of processes, and all those processes have more process, meaning, you're looking at technical analysis. Well, what are you looking at in technical analysis? Well, we're looking at, I'll call it Elliott waves. Well, how are you looking at Elliott waves? What is the Elliott wave telling you? What specifically? Is there a certain part of the Elliott waves that you're looking at? These are all, again, process. Everyone is different. Everyone is different. It's unique to everyone. But I wanted to show part of a process, or part of what we do here, through what I call unusual options activity. And I use unusual options activity differently than most people out there are talking about. Okay. 3 steps to profit is what I built to help people come up with their own system, their own process. Within itself, it's complete, but it could be, again, I'm not teaching charts, so when I say technical analysis, I have my own technical analysis. I can teach people what I like, but I know many people that have their own, tools and their own technical analysis tools, and they do a great job. Better than me, I'm sure. Many of you, you have chartists that have been doing this stuff 20 years. I'm trying to say, let me help you. Let me be additive to what you're looking at. So 3 Steps to Profit is a trading system that I've developed. It has education, which is the way I started. It has tools and trade ideas. Those are the 3 steps. You need to understand options in the way that the top guys are thinking about them. I'm giving you tools, okay? One, to either just get the idea. If, for example, let's go back for a second. If you're already comfortable coming up with your ideas, this is something that isn't taught, okay? This I teach, and I give you software to give you the answers, okay? So if you are comfortable getting your ideas, every day you're coming up with 2, 3 trading ideas through technical analysis, this part, okay, needs understanding and technology. For that, I created the new options chain. So the new options chain was basically, it's an options chain that gives you the answer. You plug in some assumptions that you have, and it gives you the answer of which is the right option to choose, which one gives you the best risk reward, okay? And it's not so simple as, oh, well, I just, if I buy this for $1, it turns into another $1, it's 1 for 1, and that's probably pretty good. No, there's a methodology behind it, okay? And so that's just know-how tool if you wanted to take your ideas and turn them into options ideas, okay? Most people have trouble with the ideas, as I noted earlier. And so I try to use unusual option activity, which I teach in the education, plus the tools, and I've added more tools to sort of give people an idea to how to analyze, how to use the options tools to analyze unusual option activity to come up with the trade ideas. And the trade ideas are by themselves. I'm going to talk about a few in a moment, but the trade ideas have different elements that we're going to look at right now. So it's education, tools, trade ideas, and then I overlaid that over the last year and a half with a newsletter and a trade idea forum. Let's go back to this and really understand each part for each person. We're going to start with number 1, and that's unusual option activity. Now, unusual option activity is fairly simple to understand. It's big options trades in the market that are trading, whether they're buying, they're selling. They're unusual generally because the relative volume is higher than what it usually trades. So if today XYZ stock traded 100,000 options and usually it trades, I don't know, 20,000 options, that would be considered unusual because it's 4 or 5 times it's 5 times what it's usually trading. And so you would want to look and say, why is today the day that everybody is trading at? Maybe there's an announcement, news. Maybe the stock is breaking out. Whatever it may be, something is going on today that was unusual versus whether it's an average over the last month or whatnot. Here's one that I picked up on June 13th. It was a buyer of 8,500 DLR, October 21st, 105 puts for $3.50. And by itself, it's not much, right? By itself, you're looking at that, it's like, okay, well, what does that mean? But the reality is that line, that option line of information gives you a lot of, I want to say, it gives you information that you can't get in real time by looking at stock 13Fs. So for example, I get here the stock that someone is looking at. I get that they're looking at the direction. So in this case, DLR 125, the stock's trading 125. They're looking at DLR. They're giving me the direction that they're trading or that they're looking at, which is puts, which is to the downside. They're also giving me time, 4 months, June to October. Trade size, 850,000 shares. I can gauge some information from that. The strike is 105. I certainly can gauge some information there. And then I have what most people don't know is that you can actually get the target stock price from this option, just this options trade. Now, going back here, remember every options trade, just, let's go look at this one more time. I'm going to show you this DLR. This trade right here, we see this in real time. So we see this at, let's say, noon tomorrow, this pops up. We know, I'm trying to express to you that this process was in motion prior to that option popping up on the screen. It's really an important lesson to understand. Okay. You're getting to see it the minute this guy, whoever it is, makes that decision. That's pretty powerful, right? You can't do that with stocks. In stocks, you can just see, yeah, volumes are up, but you have no idea who might be at this or what's going on. This is exactly at that moment, because we're spotting it, we're looking at it, it pops up on a screener, or someone is showing it to you, and you can now say, okay, this is being thought about today, right now. Somebody made the decision, instead of buying stock, they're buying options. Now, what are they looking at? What is the idea? Okay, how do we get that idea? Again, all of this is process and know-how and part of the system that I developed. So once you get all this information, you can extract it from just this one line. You can extract that information. That's not the end of it, right? That's not the end of it. At 3 steps at Options Geek and with 3 steps of profit, I'm trying to show people this filtering process. Okay, it's not that a lot of people say, oh, you just see unusual option activity and then you just follow it. Absolutely not. Absolutely not. I'm looking at a lot of unusual option activity all day, every day, trying to understand. First of all, I'm getting good information, right? If I'm seeing, just as an example, we went through a period where oil was under pressure for 3 months. All you saw was upside call selling, upside call selling. And over the last month and a half, they're starting to buy some of that stuff back, and oil is starting to come back. So it's like you can start gauging where the big guys are starting to place their money and place their bets. Again, important information. Does that mean I'm going to go out there and start shorting every oil stock or buying every? No, but if I'm trying to read the tea leaves of the market and try to understand for myself where it's going, all of this stuff helps me make sense of that. Okay, so this filtering process, once you get this UOA trade idea, goes through an options analysis process. It goes through, I add charts to it, technical analysis, and then I'm looking at fundamental analysis. Now, some of the questions are, well, how much fundamental analysis are you doing? Well, because I am getting the trade from someone who I believe has done tremendous amount of work that I can't compete with, I'm not trying to do all the fundamental analysis. In fact, it's impossible to do that each day on 2, 3, 4 stocks a day. It's impossible. Okay. What I am trying to do is really uncover what I think he thinks is important. Okay. So I'm trying to understand, why would today be the day that he's coming in for DLR? What's making it exciting? What is the story behind DLR? The reality is, after I saw that trade, I didn't know. I saw it. I started looking at it a little bit. I understood they did data warehouses, but I was thinking, okay, I guess it's something about the technology, the big technology guys, maybe they're not using them. But I had for me, I didn't know where their edge was. I'm trying to find it. It's a REIT. And so these are always not always, but generally hard to short. A lot of people coming in over the last few months, coming in shorting these REITs. They've been dead right over the course of 3, 4 months. But I didn't know that at the time. I was trying to understand. Technical analysis. What technical analysis do I use? In general, I'm using simple stuff. I'm not going too far deep into technical analysis. I don't want to muddy the story. I just want to look at it and say, as an easy way to think about it, I simply take the UOA in DLR. If they're buying puts, I tend to look at a chart and say, is it going down? Is this chart looking down, or is this chart looking up? That's my immediate, without doing any work. It's just look at the chart. What is it saying immediately to you? If it matches, someone's buying puts and I look at it and go, stock looks like it's weak, it's going lower, I'm more interested. I'm going to start doing more work on it. I'm going to start looking at it and say, okay, where can it go? I'm starting to take all that information that we got up top, and I'm trying to piece that information. And now I'm trying to connect the dots between what I'm seeing in technical analysis and the options analysis. Once I do that, and I'm convinced that, there might be something here, maybe, just maybe there's something here, because things are pointing in the right direction. This does look weak, and they're saying it can go here, and here matches up with my technical analysis. Things are starting to connect a little bit. I'm more interested. Now comes the tough part. Now I got to figure out, why would he do this? What's going on in DLR? Where do you go for that? How do you get that information? Over time, when you see me write these ideas, you start learning what I'm looking at. You start seeing, where I'm getting my information from. Usually it's from the horse's mouth, right? I'm taking comments from the CEO, right? The earnings call. I'm listening to the CEO. What is the CFO saying? These are things that are helping me understand what the idea might be. When all these three things come together and everything is lighting up in a certain way, I get excited. I start thinking about it more. I start saying, how can I play this? Is there a better way to play this than the way, I know from experience, these top guys are asking an options expert, and an options expert might have said, this is the best one. They probably know that as well, but maybe they don't. There's a lot of, if they're trading 10,000 options, they probably know that, but there's a lot of hedge funds that ask, the representative at Goldman Sachs, which is the one I should buy. And they're relying on that person's answer. But in this case, in the DLR, they obviously are looking at it. They're buying the 105s for a reason, and there's a target. Okay. So that's important. Now, what becomes very, very important, is this stream of ideas. The stream of ideas, we're not trying to isolate one or two. When I'm saying UOA, we're looking at a bunch of ideas. I'm looking at them all day, seeing them come in, and I'm filtering them. So it's this process of getting a consistent stream of trade ideas. I call them quality trade ideas, because I know that every one of these UOAs that I've identified, these big ones, have gone through this process. And so because they've gone through this process, I'm comfortable to look at it and saying, what can I determine what they were thinking? Can I go back in time and determine? Can I be a detective and figure it out? Okay. The stream of ideas will be your most important asset. The hedge fund traders and managers that are on Wall Street, they're constantly asking for ideas, good ideas, obviously. They want their representatives at Bank of America, at Goldman, their research analysts to call them up and say, this is something you should look at, point them in the right direction. All these hedge funds who are active, they're constantly looking for great ideas, constantly. Send it in, and then within the hedge fund, they have their own filter, their own process, okay? So this stream of ideas. Now, back to the unusual option activity. How do you filter, right? You're going to run into problems. The problem I showed you with the options. How do you think about it? What does it mean to be an unexpected move, right? With unusual options activity, how do you filter it? With the unusual options activity, we got these numbers, and we got we got these numbers, and we filtered it. That UOA trade went through this process: options analysis, technical analysis, fundamental. I got stuck on the fundamental analysis. I couldn't figure it out, like I told you. But just so happens, I want to say about a month later, it was in the news that, what's his name? Chanos came out and was basically saying he was going to start a fund for the sole purpose to short DLR, and was looking for investors on who would short DLR. He had the idea, and I think he was putting a couple $100 million on it, and he was going to just start one fund, one stock. He was going to short it. I thought that was the signal. I went back to my notes. I figured, I remember seeing something in DLR. I'm looking at the holders here, and I see Elliott Investment. I was thinking I was going to see Chanos. Chanos is talking on TV, on CNBC, and I'm thinking, okay, well, he's obviously going to say, let me just verify, right? I'm trying to use data, and I'm trying to use factual stuff to verify what we're seeing, and verify, okay, I want to see Jim Chanos in it. Show me Chanos in it. I was surprised to see Elliott. And then I saw Elliott had done this roll from July to October. It's hard to see, but in the tools, you could start going back in time with historical data. And I started making this story, and I said, oh, he was into 115s. He's rolled down to the 105s. To me, this story got a lot juicier when I saw Elliott Investment Management. Now, I personally know Elliott Investment Management. I used to cover them for years at Bank of America. They were a big customer of Bank of America. And so I know how much work they do. I know how smart they are. I know when they're tackling a name, there's reasoning behind it, and they know how to pick the right options, and they're doing the right things. Okay, so and they're not players that are, where I think DLR, something's going to happen in the next week. So that gave me more confidence that this is a longer term story, that they believe the stock could tank, and they're buying puts to be in there, because when it starts going down, it will tank. Okay. by looking at the options, by actually looking at the 13F. Okay, these are the 13F, these are holders. By looking at the 13F, I go back and I can actually look and research and see the exact time they printed, the exact time, when they bought the Julys, when they rolled to the Octobers. I can see all that information. And that information made me get a lot more confident in DLR. We wound up taking a position in DLR. We didn't do the same trade Elliott did. We wound up buying more time because me knowing that Elliott is more of a long-term thinker, I wanted more time. Okay. The trade should have worked out for most people at Options Key. It went from $4 to $2 on a spread. We actually did a spread there. I did a spread because this put that they were buying was so far away, okay, that I had trouble believing that it would get to their target stock price was probably around the high 80s. I had trouble believing that with DLR trading, at 120 something where it was at the time, to get down to 80, the high 80s, I just had trouble believing that. Not saying that it couldn't. I trust, when I know Elliott's getting involved in the name, I know why they're buying puts. I know they can, I know they believe that it could, they wouldn't buy it unless it would collapse. And so I was thinking, okay, well, let me structure a trade where if Elliott is right, okay, if Elliott is right, I'm going to make money. But if Elliott is wrong on timing, which they usually are, okay, I know that they'll even tell you that. They're like, timing is, they think this is going to collapse. So they just start buying puts and ultimately just keep rolling and rolling until it gets to wherever they believe this is going to go. Okay. And I structured a trade knowing who Elliott was, knowing Chanos was starting to get involved. And it went from 4 to 2 to 20 something. Okay. So it was a huge, huge trade. And I wanted to give you sort of the idea of going through that process. Let me give you another one here. Goldman Sachs, another one. Saw a buyer in January puts a while ago. And I'm thinking to myself, book value on Goldman Sachs is around 300. Okay. Book value for the banks, sometimes it's difficult to trust what book value can be when the whole market is falling apart, because book value means essentially that if Goldman Sachs sold everything, what would it be worth, right? You take a haircut on some of these positions, but in a disaster, when you're going to sell everything, when everything is getting killed, I tend to believe that book value is probably way too high for a situation where you have to be a seller of the amount they have, right? And so you have to consider where things are marked. And in a crash scenario or in a really bad scenario where there's a liquidation problem, where is it? So, book value is not something that, especially for banks when the market's crashing, you want to be careful. So $300 book value, someone's paying, but it's a good start. Book value is a good start, tangible book. So someone is paying for the 300 puts. And I'm thinking, why would somebody be paying for the 300 puts? That's tangible book. Like, what's really going on? That attracts me to Goldman Sachs. And I do the chart and same thing, it's pointing lower, it's under pressure, like all the banks have been. And, I start digging in, I listen to the call and I see these numbers. And just to point out sort of some of the logic that's going on here, I looked at this and I'll say, December 12th, this is a little bit difficult to read, it's tiny here, but basically at the top, you're seeing from December 12th, 13, 14, 15, 16, all the way to the 21st. If you look at the total revenues from 2013, 14, 15, 16, 17, 18, what you see is 34 billion, 34 billion, 34.5 billion, 34 billion, 30 billion, 32 billion, 36 billion, 35 billion. And then in 2020, you start getting this ramp of 41 billion. And then in 2021, you get almost 60 billion. Okay, so in the last 2 years, December 2020 and 2021, they made $100 billion in revenue. In the earnings call, CEO, I was going to call him DJ Solomon, CEO Solomon, he came out and basically said, he kept on repeating, he says, we're going back to normal. Things got out of hand, 2020 to that. We had great years, but, we're kind of shrinking back to normal here. We're getting back to some normalization. Okay. And to me, I look at that and I say, well, normal is about $35 billion. I mean, if he's telling you we're going back to normal, and it sounds about right, when investment banking revenues are dropping 80 to 90%, the only thing keeping them alive is essentially trading. Their trading is done great. They continue to do great, but you get one bad quarter, and Goldman has had one bad quarter, the stock could get destroyed. So this is something where I'm looking at, and again, chart, the UOA, and some fundamental story that I'm trying to lean on to say that makes sense to me. I'm going to do this in front of earnings. The stock went down. The options went to 100, 175, depending on where you got in, eventually came back. It should have been a winner for most people. Okay. But that was the logic. That's what we're thinking. Filtering process. This one looks good. CEO, I can sort of see what's happening, and I can point to something to say, this looks like, if someone was shorting this thing, they would be worried about this. Okay. That's Goldman Sachs. MPW. I mean, I'm not going to know more than what really is out there. There's, it seems like 100 million people looking at MPW. And by the way, in Goldman Sachs, I'm trying to get back into a short. I'm looking, I'm close to sort of pulling the trigger to get back into a Goldman Sachs short. DLR has already played itself out. If it gets back up, I'd look to get back in. MPW.
Hey, Felix.
Yes.
One of the attendees is asking GS.
Sure.
This is the question. And he says GS is almost trading at 330. I think you mentioned the 300
Yes.
puts, right?
Yes.
Yeah.
They bought the 300 puts. This was a couple of months ago on the way down. We were long the 280, the 285, 277 and a half call spread, put spread. Went to about, I think we paid for, I want to say, I don't have the exact numbers. I think we got to like 280, maybe we paid 250, and it got to about $7, got to about $7. So, but after earnings, it came out with decent earnings. They reshuffled. So Goldman Sachs reshuffled their whole business. And you would only really do that because they're expecting this normalization. They're trying to hide all the weak spots that are going to be popping up over the next year. So they combined investment banking with trading, and investment trading is just going to just swamp investment banking revenues. So we may not get a good look as to how good investment banking is doing. Once you put trading and investment banking together, you could play around with expenses and say, okay, take all the expenses out of investment banking and throw it into trading to make the investment banking business look better. So there's a lot of things you can do there. Go ahead. More questions?
No, that's good.
Okay. So yeah, so it is 330, and I'm looking at re-entering Goldman Sachs with a short. MPW. This is the trade that millions of people love to hate. I don't have, much. I threw this out there. I wanted to show this. This is a trade we currently have on. I try not to have too much of an opinion. I'm looking, I'm trained to look for risk reward. Okay. So with the Goldman Sachs, same thing, risk reward. It's, $300 tangible book. If everybody's looking at $300 tangible book, and it's wrong, the stock is going to get crushed. Okay. Same thing with DLR. If everybody's looking at it and saying it's a REIT and these things don't go down as much, but I see Elliott saying, no, if it goes down, it's going to get crushed. I'm interested. MPW is a name with a story out. It's a REIT, another REIT. The stock's down from 25 to 21 to 15, all the way down to, it got down to about 8, 9, I believe. I think it was 9 and a half, $10. And what I did was, this is something, there's a tool we have at Options Geek, and it shows open interest, and it's a way to graph open interest in MPW. And I think it's clear to show that this chart shows where the bets are. Okay, people are clearly leaning short. And I look at this and I say, okay, what the hell's the story here? Like, there's obviously a story. Everybody and their mother is actually short this thing. And I'm trying to figure out what's happening. So I try to dig a little bit. Now, I'm not going to spend 2 weeks digging at MPW. What I'm trying to do is just trying to figure out what's the story. What's making people excited about shorting this thing? I read the story. Quickly browse through 10 stories. I listen to the CEO, the CFO talk. Essentially, what the story comes down to is whether or not this one customer, Stewart, survives or doesn't survive is really what it comes down to. Okay. There's a lot of other pieces to the puzzle, but there's nothing bigger than if Stewart is okay with paying their rent. Now, the big part about this is that MPW has actually paid or lent money to MPW so that Stewart could actually pay back MPW for rent. That's been this big, why would somebody do that? Why would you give money to your tenant so your tenant pays you back? I looked at the CEO. I mean, you could just read the transcript. And the CEO gave an answer that basically said, we looked at it. We looked at the books, at Stewart's books, and they have these payments that are being made that are due in this sort of time period. And during this time period, they're going to need some cash because they have to make these payments, and we're going to give them the cash because after this period is done, they're going to come back to positive EBITDA, and they're going to be doing really well over the course of right after this period. And so we're going to lend them money so that they can pay their rent, and we're going to keep going on with our lives. The shorts are all over this. They're literally all over this. There's several research houses that are on this, and I look at this and I say, okay, so the CEO and them are saying that it's okay, everything's fine. The shorts are saying that they need to come out they need to see the books of Stewart, and because the management won't show the books, management is saying that maybe there's an NDA, or then they don't need to, and so either they're committing fraud, okay, because the shorts are pointed to some this SEC clause, and I think the executives have too much to lose to actually be that blatant and just, everybody's calling them out and they're just saying, no, I'm going to do it. But maybe it is fraud. I'm not saying it's not. They're also pointing to the executives selling their stock. But these guys have been selling stock for a long time, and in fact, the guy's probably 50 something years old. You got to think also psychology. In 2008-9, he lost 80% he had a lot of money in MPW. He lost 80%. The stock went from 5 to 1. That does something to someone. If you build a company, you lose 80%. Do you want to have all your eggs in one basket? The next time the stock goes all the way up, and I don't know. I can't fault the guy too much for selling stock. I get it. People say, there's something bad going on, maybe, but to prove fraud takes a while. Before Tyco was found, the fraud, it took years. Enron, years. I mean, people were going into Enron's offices and trying to figure out if it was fraud and looking around, and Enron was slick, and they moved everybody around and put everybody in places and said, act like you're trading and doing something. And, there you go. So, it is difficult to prove fraud and to be correct, to be dead right with the timing. So what am I doing here? I actually am just taking the other side of this and saying, I'm going to buy the 11 calls for January. We have an earnings that come out in November. I think the risk reward is great there because any positive news, and I don't know how they'll be positive, but any positive news, and you can get, or maybe even no news, and there's a lot of shorts in the stock as well, you can get a move back up towards 14, 15 bucks. And I'm looking at that and I'm saying, let's think about this. If I'm the CEO, I always ask Options Geek members to put themselves in the CEO's position. If I'm the CEO and I know that everything is fine, I know Stewart's going to pay me. I've looked at their books, and there's other people that have looked at their books, and we believe it's totally fine. Do I need to come out so much and start saying and prove that I'm right? These guys get paid a lot in stock. 80% of their, you're the CEO, you get 80% in stock. When do they get paid? Probably at the end of the year. I don't know, but probably at the end of the year. If I'm the CEO, do I want to get the stock back? Do I want to make a statement and make everybody happy and get the stock back up to 16, 17? Or do I want to get paid on stock that after I get paid, I can actually come out and say, see, I told you there was nothing going on. And the stock goes from 11 back to 20 and I double my money on the stock. I probably am not going to say anything until I actually receive my stock and get paid. Now, maybe I don't get paid as much, but either way, I want to make sure that I want to get the stock before I actually come out there and say it's going up. They announced a 500 buyback, whether they buy the stock back or not, I don't know. But this is a fight between the shorts and the management saying that everything is fine. I'm willing to take the risk reward here. I think it's to the upside, only because there are so many people pushed here. Time is against them. The more time passes, the more that these options start shrinking, causing people to sell, pushing the stock up, which will push the next stock up and could potentially cause a little bit of a squeeze here. Again, I always say I get paid to look at risk reward as opposed to, really determining the exact, I know where it's going? I have no idea. But looking at this chart, that's my belief is that you can actually get a bigger thrust upward from 11 to 16. Any questions?
No, we're good.
Good.
Actually, someone just asked, how many trades do you offer a week? I guess maybe that's in your service.
Sure. So I do tough environments. I'm only going to do 2, maybe 3. I'm sitting here, right? It takes a while to obviously put these together, the trade ideas together. And I sit here and sometimes I can't even, I have the trade idea all written up and the market, in this case, the market's down 2%, 3% overnight. It's like things change, you know what I mean? And it's, I'm about two trades per week. I'd like to get it up to about 3, but right now it's been around 2. It's been around 2 per week. And again, they're write-ups, 2-3 pages. They have charts. They have, you see the charts. Every trade idea will have the options analysis, the chart analysis, technical analysis, and fundamental analysis. And then there's this story. I'm trying to meld it. I'm trying to get you into the minds of the CEO, what we're looking at, why we're looking at it, what we're playing for, and then trying to help people with, like, I'm doing spreads a little bit more simply to reduce the volatility. But yeah, so that's what we're doing. So 2 to 3 per week. And this is when people ask me, is the edge the UOA trade idea? I say, no, absolutely not. The edge is in the process, is in the filtering process to get the trade idea.
Yeah, just so everyone knows, you're gonna have to do lots. You can't put all the chips in on one trade, right?
Exactly.
Particularly in this environment. What you're learning from Felix is the process and the analysis, and then you've got to trade. You gotta save, your gunpowder for another trade and another trade and another trade.
That's right.
Particularly in this volatile market. And we did have a question about the volatility from Steven. He was asking, hello, Felix, how are you doing? I hope you are doing well. I would like to get your thoughts on day trading options because of the current conditions of volatility. The big problem currently, if you buy an option, a person needs to beat the premium spread that he or she paid to make the profit. I would appreciate your thoughts on the topic. Thank you. So I guess,
yeah, I'll give you, I'm going to tell you, actually, it's a great question. I didn't even, let me go back up a little bit. Just want to make sure I address it. This is an important question. Okay. And again, I don't give the typical answers that you're going to get everywhere else, but I'm going to tell you that day trading options is, how about this? Day trading stocks is difficult. Day trading options is like, you're just asking for a beat, over time. You might win 1 day, 2 days, but over time, it's really difficult. It's really difficult. Now, people say, why do you say that? I say, well, you can do it, but what people don't understand, and I teach this in 3 Steps to Profit, it's probably the most immediate value. I'll say it's the most immediate value that I offer 3 Steps to Profit, which is, how do you avoid the traps laid down by the options market makers? How do you avoid them? Okay. I'm going to tell you, frankly, most people don't even know they exist. They don't even know they exist. Just like I invented the new options chain, and I'm telling people, by the way, there's no answer. Nobody teaches you how to actually do it. So, when you're playing any probability game, if you're just guessing at what you're doing, are you going to win at that probability game? I'm going to tell you, over time, you're not. Okay. So that's just one trap that I've actually laid the foundation for, of telling people what you don't know can actually hurt you. I have a video that you can see on the site. And I call it, is the options market rigged? Is the options market rigged? Because there are these traps laid by the options market makers that take your money if you're going to give it to them. Okay. And like I said, the most immediate value I offer is in the understanding of these traps, where these traps are, what they do, what they're doing, and how they're taking your money. Okay. And let me tell you, I have another lander that has a calculator. I have one of the videos on my YouTube site, has a calculator. People don't believe it. I say, here's a calculator. Type in how many trades you do a day, and it's going to tell you how much money you're probably giving away. Okay. What people are shocked at is the amount that it pops up on the calculator. This is like, this is garbage. This is like a joke. It's not. Okay. There are people who start with, say, a $20,000 account. They're doing all this trading every day, up and down, up and down. At the end of the year, they break even. Okay. And they're like, damn, 20 grand. I didn't make any money this year. If you broke even, I'm telling you, you're really good at the game. Because if you're doing that each day and you broke even, when I know how much money they're actually taking from you by just looking at what you're doing and saying, you don't know a lot about options. Yeah, you're sort of picking the right direction up and down, but there's a calculator, you can actually plug it in. But if you're using, let's call it 3 round trip trades per day on a $3,000 account, it's sort of, it's like you're giving away $3,000. So if you double the account, if you doubled your money, you would actually still be at $3,000, because I call it the invisible costs. Nobody sees, you can't see it, but it's being drained from you. And again, nobody's going to believe me. I'm talking, screaming off a building, telling people, just be careful. There's invisible costs, the cost of doing business, and you're getting killed and you don't even know it. It's like somebody's picking your pocket and smiling at you and having a nice conversation. Meanwhile, they're taking your money, and they're smart. They're not taking your whole wallet. They see you have $100, they take out 20 and they put back the 80, or they take out 5, give you back the 95. And you're not going to know the difference if it was in 1s, 5s, or 10s. That's what's happening in the market. And it's really important to understand those traps. I'm trying to help people save money. If I help someone save, you have a $20,000 account, and I'm trying to help you save $5,000 to $10,000. I mean, it's the same thing as making money. And that's, so I would say, look, trading, going back to the question, day trading options is difficult. It's almost impossible if you don't know what you're doing. And lastly, if you don't understand who you're up against, where you're buying this stuff back and forth, if you don't understand that, then you're destined to lose. And it's important to understand that. It's really, it's very, very important. Anybody who tells me they day trade options, I ask them a couple of questions. I say, look, it's really hard to beat the machine. Okay, it's really hard to beat the machine. Is it rigged? I don't know. I've told you that nobody teaches you how to buy an option. And if once you hear the explanation and you understand, it's playing heads or tails, and you don't know what you're doing. You don't even know the odds you're getting. It's not 1-to-1. It's like 1.5-to-1 against you. You're going to lose that game. They want you to win. They want you to win, and they want you to keep playing over and over, but it's very difficult, and they do very specific things. The market makers, the computers are doing very specific things that I'm trying to steer people away from. Next
Perfect.
question.
Someone asked, is there a link to the video? I just put it in the Zoom, and I also, anyone on YouTube, it's there. But any video we do, Market Chameleon goes to our YouTube channel. So I don't know, this is probably the 10th or 15th webinar we've done with Felix. Each one is better than the next, I must say. A lot of people come out of the woodwork for Felix. It's been a great webinar, Felix. Thanks so much. Someone was asking for you to, well, 2 things. They wanted you to share your subscription, how it works, how they contact you. The other was, are any of those trap resources free, or are they part of the subscription?
So here's what I have done. I give people a quick look at everything for $79, not to trade ideas. So for example, if you want, not 3 steps of profit, I call it the top 1% club. If you have your own ideas and you just want to use the new options chain, it's $79 for an annual. You get a good look inside. You get to see a lot of the education, what's going on. You don't get the main education. The main education I offer only with 3 Steps to Profit. With 3 Steps to Profit, you get the education, the new options chain, a screener for the unusual options activity, screen and trade ideas. And then you get 1 month of trade ideas, which is about, let's call it 8 to 11 trade ideas per month. Okay, so you get that as a package. That package, is a ridiculous cost when I'm just telling you that also in that package is the education on what not to do. So if you're day trading options and you don't understand what you're doing, you're going to lose. I promise you. If you're feeding, how do you think Citadel makes $6 to $10 billion a year? I show you in very specific terms exactly what they're doing, and I tell you, don't do that. Don't fall for that trap. That is a trap. That's how they take your money. And I show people. And I show them and I go bit by bit and I say, see this, see that, point A, point B, they just took your money. You didn't even know it. And you wouldn't know it if I didn't explain it to you. Okay, so you want to prevent that. Okay, so that's education, tools, trade ideas, and you get the Winning Picks newsletter for the month and you get the trade idea forum. The Winning Picks newsletter, okay, some people say, well, what is this? You're not giving me the trade ideas. Those are the trade ideas. You need, remember, to make this process, I'm showing you the process. To make this process work, you need a stream of trade ideas. You need them to come at you all the time so that you can look at them, because those are the beginning. Those are the beginning ping pongs, if you will, going down into your funnel. Those are the beginning ping pongs that 1 or 2 or 3 out of 20 is going to be the ones that are really worthwhile. And so the other ones, you could just gather information and use that as information. If they start popping up again, some of the best UOA, unusual option activity, is when someone keeps buying the same option comes back 2, 3, 4 days in a row. That becomes interesting just because the pattern of buying. So the Winning Picks newsletter is extraordinarily valuable to someone who's looking at a process. Okay, then the trade idea forum is, one, gives you access to me at a low price. I'm doing this at a low price. So you get access to me, you get access to all the tools, all the features of the tools. You get, we're talking about trade ideas, not giving away the Winning Picks ideas, because that's a separate thing, but we're talking about trade ideas. I'm answering questions to trying to help people develop the ideas with links, articles, where, people are asking me questions, trying to make people better. And now I'm adding some research, which is super valuable to people who are looking for institutional research. So these are all things that come in 3 Steps to Profit. 3 Steps to Profit, education plus tools. Okay, if you want you're going to get the tool, the two main tools, which is new option chain and the screener. But then there's a subscription each month, and if you want the trade ideas, it's $197 per month, and if you want the just the tools and the forum and the newsletter, that's $50 a month. So that's what I offer. I don't think you can beat it in price compared to everything else. I mean, it's just, there's no comparison. People have come to me, tell me they spent $15,000 on education, which is crazy. There's just no comparison. So I offer it at a low price. The top 1% package is a low price, and really just trying to get people to understand what we're doing and how valuable each piece is to the overall puzzle.
Well, that was a great hour, Felix.
Awesome.
Awesome job, my friend. Always a pleasure. We'd love
any
to
more
have you on the
questions,
morning
you
show.
can
If there's
just,
ever
any
a
more
morning-
questions, you can send an email to felix@optionsgeek.com and just tell me that you saw the Market Chameleon webinar and introduce yourself, and I'm happy to answer any questions.
Yeah, I put multiple links in there to the 3 Steps to Profit. So click on over. I also put a link to the YouTube channel. I would subscribe. The video is going to be there. I'll also put Felix's email in the description of the video. You can also reach out to us, support@MarketChameleon.com, if you want Felix's information, we can get it to you there. Great job, Felix. Thanks for giving us an hour to the Chameleon community. Everyone really enjoyed the show. Thanks so much, buddy.
All right, be good.